This is Satya Pradyuman of Cirrus Research. The latest issue of a risk metrics report is just out. The title, Global Bond Sell-Off Points to Slowing Growth and Increased Crowding Risks. A couple of topics covered in this report. One, underscore the fact that valuations are starting to matter. Part of the driver of this is the fact that bond yields have started to back up. In addition to that, some of our tactical measures are starting to move to a frothier reading that has other implications about becoming defensive. Let me walk through it. With it quickly. Number one, we've seen the U.S. Treasury market. The yields have backed up sharply by about 100 basis points in the last 3-4 weeks. What we're also noticing is other key markets such as Germany, UK are also really tracking the U.S. The implication here is that valuations are likely to become more relevant. If you had the long bond rally, then you're looking at a world where there's multiple expansion. In this case, this is really driving us more towards an earnings-driven marketplace. In addition to that, in terms of valuations, just a reality check, the U.S. has been a dominant market in terms of performance in the last couple of years. What's notable is that, at least in our global benchmarks, we're now recognizing that the U.S. represents roughly about 55% of the total world equity markets. This is fairly significant given what we've seen in the last decade or two. Our numbers going back to the 2010 era in the 35-40 handle in terms of what the U.S. represented. So this is really a very back of the envelope estimation on valuations as a whole. And then finally, this idea about where risk taking is. This bubble chart represents various key markets globally. The larger the bubble, the higher the market cap. The U.S. has got the largest sized marking here. The x-axis tells us a little bit about risk aversion. And if we were to look at this exhibit about 6-8 months ago or a year ago, most of these bubbles were clustered left of center. We're now starting to shift right. As we cross the 1 standard deviation line, that's really where we will begin to become more concerned, begin to reposition the portfolio. But the reality, though, is that this track is on the move, and we have seen a real shift. The U.S. is starting to has started to surface in this direction. We'll definitely keep a close watch on this. Take a look at the full report, and as always, feel free to reach out to us with any questions. Thank you.